Let's see if this works. All right. Today I got 4 pictures from some trades from this week, and I'm gonna talk about them, and I'm gonna use all of them are trades from intraday. They all use the direct trade system, direct price action, direct PA, or just direct power as I call it. Yeah, and it is about interpreting where the direction of price wants to go and where power was, finding something that is left, meaning perhaps avoid gap in price, avoid in power, and placing a trade there or close there, and attempting to go to where price wants to go, and that's normally the next liquidity high-low. Yeah, so let's see. I'm gonna pull up the thing. This should be working. Yeah, I think it works. So the idea on this, the idea is here, the lines up, down, and then we go all the way up. Green signifies here, it shows that okay, there was something missing here, and below this area, when we come here, this is where I want to enter a trade, because power up, and we try to go there. Perhaps this is a bit misleading because it's just a line. It doesn't show, well, in actual the bars you see there's a spike down and there's no close, so perhaps this should be higher. This should be perhaps here. Anyway, so price, what is price doing? So this instrument is NQ, but it's a CFD of US 100. And so the trade is taken at New York, or close to New York Open. At my time it's 1500 hours. And what do we have? So price was going down, came back, price was going down, whatever. And so I marked this here. We came to this level and then lower, but we couldn't go further, or this did not happen. So price did then go past it. Then I used the symbol ring with dash. Price went after this, and it means that, well, now price, the power, it has turned to up. Okay, so we go up, we go down again. Here's a real thick bar start, and I think this is maybe this is New York and this is Chicago, I don't know, but this is just like with a price, the trading starts. Notice like the bars are smaller, and then boom, here we get power going. So we go down, we try, and we go up. Maybe higher, I don't know, but there's small spike, small pin, and we go higher and we come back down, and notice the pin, same low, pin goes through but does not close. What does that mean? Well, there was not enough people or robots, whatever, pushing price down, and we end up going up. Okay, so that's why I used the double line, and that is so we have floor. Double line means floor power, or if it's on the other side, it's like the top, right? So we go up, and then we have this green FVG, we call it FVG, but notice that all the bars, they cover each other, right? And this green bar here is not covered in the area where the green rectangle is, and that is where the discrepancy is. So we go up, and there's another signal to pick it up here. I don't use that, but I focus on this area here. Perhaps there's a trade in here as well on a little bit faster chart, but that's not what I'm showing in this example. This is the high that we come up to. We came to here. This is all the way we could go. And when price comes back to this area here, yeah, notice we have the red with the green, red with the green, and the entry is placed here. Yeah, this trader using this particular trade, this is not my trade, is using a limit order placed at the level of, you see where the green meets the blue, the limit there for a long, and the stop just at this level. That's why the trade is like this. But yeah, so the idea is valid. Yes, you can say that, well, with my other systems we change power to down here. Yes, I absolutely agree, and we continue down after, but never mind that. At this current state, we have some power left to go up, and this is what the trader is doing. And notice we have red with green, very strong long signal with the spike as well. Spike does not go beyond this. Spike does go down. Green covers almost the entire red, meaning so we had so much power to go all this way and then come up and close here and then continue closing almost all the way to the top. This formation, red plus green like this, where the green goes more than 50% into the bar and closes, is a strong signal of power up. Likewise, the price formation before, the red with the green like this is a breaking formation. So it's like, if you lift a ball if you take small tennis ball, you hold it over your head, you release it, it drops down and stays down, right? Because gravity. This is a reaction like this: red, boom, green. It's a harami stopping formation. So we fall down and we get collect power up, and we go up and we aim for this high that I marked here. Why? Because in my system, if we don't scrape the liquidity on one side, we aim for the flat top. That's why what I do, and I have found that to be better than to attempt to go for the edge. And you may not agree, that's my system. And yeah, and that's the trade. Okay, so next one, let's see. Next one, this is one of mine. And this is an EU, it's on M15. And what you don't see here is price was way up here and came down. Notice the double lines. It's a new day. Notice it says Feb, it says 01. So this example is just, this is the way price behaved. Okay, we fell down, but you don't see it because huge gap, right? So power was down, I know that, but this chart will show something. Okay, so we come down with huge gap, price begins to come up. And notice that, it spikes. It's a lot of spikes on the top side. It doesn't want to close beyond the spikes, right? Almost like even this highest close here just barely goes beyond this one, right? What's that? I am not personally impressed. Okay, so we end up closing lower. This red, lower close, as I said. The arrow denotes the power direction. Okay, so we go down and something we come back up again. At this point, well, I don't know what this is, and we come back down again. Now, the circles I draw at the spikes like this, and I draw a line like this because, well, I see in my head, I see the double low, right? And what is that? Well, it's in the reverse with the highs, but I think if you watch Dave says double highs touch the lows, and you have, if you understand why, then yeah, you understand why it's said. So if price does not want to go down, where should price go? Well, it should be obvious, right? There's two directions to choose from. So we form double low and the price goes way up. Now, if the power is down, we have power from here. Here we have lower closing price, not a lower price, but a lower closing price. This is the close price, this is close price. This is lower than this. This is where we were. Here's a gap showing us power, FUG, right? This is the highest bar, the red one, that I try to, well, it's not exactly, but I try to outline the top of the box here. And the low of the red one I use, in this case, I draw it like this, right? So we have the blue with the green. So we have power down from this area. Double lines showing that this should be the roof. Strong block creates a lower close, has FUG, right? Strong block, three things. Yeah, double. And we come back up, and as we come back up, we go, as soon as we pass this, this one is not good enough because power, it's a short signal, but it's weak also, but the short signal is too low. There's not enough risk to reward as at this point here, so it's ignored. And this is a stopping formation, red with green. It's not a short. Short is not stopping formation, right? Spinning top can also be short information, but this one, not very convincing. So we come all the way up here. Perhaps on the red one, you could claim that, yeah, we have some, now we don't want to go further because green up with small red harami, meaning stop, and spinning top could say power now, time to go down. Yeah, could be. But the green bar following after, hell yeah. Now we have power. And the red one following, oh yeah, engulfing this, even better. So now we have breaking, power, and we just go. And the target for this trade, the same way. We didn't scrape the highs, did we? No scraping lick. We go to the flat top, bottom here. In this case, because short. That's why it's here. And that is this trade. Next. Okay, so German DAX 40, 50-minute index has been going up. Came up from this level, right? To this high. That's what we have. During the day, pretty flat, nothing interesting. And unless we create double top, we can't use the action for with my rules anyway. So at the time here, this is 12 o'clock, so close to lunch. We get this high, we get spikes, we get just like you see one. This is the same bars, doesn't matter, but the same one. Then there's a gap down. It's very small. Let's see if we can zoom in. Maybe yeah. Let's see. See the red bar here with the spike. So we have the highs, we have the spike with the low outlined. We have soon again another high that, as you see, all the spikes go through, and I outline like this. They are on the same level, and I use the yellow block to highlight it. And the spikes are again into the yellow block now, meaning we have a double high, two rings. We have this low. We could go this high, but we could not pass this level, so we are stuck now in a range, right? Double highs, this is the level. And now what happens? You see this red bar here, like the thumb is touching it, right? Like this. It closes beyond the low here, right? Meaning now power is down. Excellent. Power was up, power is down. So circle with dash, change of power, double dash, strong highs, and with change of direction with my direct system, it means entry. So we enter here, we go for this level, because if you take a tool and measure 1 to 1 here, and then you ask yourself, where is the next strong block after that 1 to 1, right? You will see that we're talking about this level here. And some people might say, but it's this one. Yeah, there is some power here as well, but I'm talking about the next block. So 1 is probably around here. And you notice some gaps. There's a lot of power pushing up here, right? But the next block floor, this, and that's why target is there, and it hits TP. Okay, not sure. It should be another trade. Oh yeah, we need to do this. Oh yeah. Oh yes, another one. So similar FTSE 150 minutes. I took a trade long here, and then I didn't take these because I was doing something else, but the review is following here as per the rules. So the orange is showing in this example a level from H4. The line is from H4. This is the previous top, and we have power up. So we should be looking for longs if we're using multi-chart system, but this trade does not use that system. So on the faster chart, the 15 minutes, this is what happened. Blue, first box, the low, created high. Okay, we fall down, we close below the low with this bar, circle with dash. Right, We then come up and we go further down. We come to this point here. Price could only go this high before we came here. So I draw a new block here because this is now where the power was to go down, because we broke down from here. So the high of the highest bar here, the low of the red here, and even if I was selecting the other color in this case, it wouldn't work because, well, my selection rules are quite different. But I would go to so far as I could pull the blue box down to these spikes here, encompassing the imbalance. In this case, I didn't draw out the imbalance, but I just, maybe it is too obvious for me. I just see it, and perhaps that's why I don't draw it. So we have the blue box, power down. Now what do we do? Well, nothing really, because we came to this level here and there's no double low. See, nothing here, no double lows. We have power down all the way until we come to this level. In this case, we scrape the high. So we have a red pin and a green power with a spike. Cool, nothing fancy about that. We have a red. And the red bar, nice pin. Okay, so now we are rejecting this box. Cool, add a trade, boom, stop at, in this case, I didn't, maybe I should have put the stop above this level. Ah, yes, that's what I was thinking. So in this case, I use a stop two stops behind, or 2 levels behind. It's a bit more nuanced, a bit more complex, but if I was to place a trade 1 stop behind, it would be very simple. Just put stop here. But in this case, I thought to myself that, well, here we came down from here, and here's a small area where we did have some kind of reaction before, and this was a strong level. That's why the stop is here. Anyway, never mind. It might as well have been here, but that's not in this example. So that's the entry anyway, and the stop is there. So as for the target, 1 to 1. Well, we end up with this thing, and the next lick, well, guess what? Is here. I guess it's here, yeah. Well, my eyes might deceive me a little bit, but yeah, well, either here, or, well, this thing or this thing, but in this case, it's this thing here. So, also, what happened? Price fell down and came back up. Notice the yellow box. In this case, also double highs, with the low, and yeah, cool. So in this case, some trailing is used. This is the, well, it's one high. It's a next lower, next lower, next lower. So as I trail 2 steps behind, initially we are here with a new low created. I might put stop here. With the new low created, I use this level and the new low, etc. This and then this. So all I have to ask is, did price create a new low? We were here, we created a low. Okay, next low that was created, here, lower close, cool. At this point, stop might be here, and it's break even, and that's fine. And then falls down, and whatever something happens, yeah, okay, whatever. And double dash here is because there's another double low with a high. The rule is double highs, double low, stop can go directly to the one side. So if we were long, it can go here, and if we are short, boom, boom, it can go here. And that's that example. And yeah, that's me talking. I'm gonna now make some food, and yeah, if you like this, if you have questions, post your questions, and I'll see you in the markets.